Hi, and thank you for joining me again. Saturday. Would have done this about 3.5 hours ago. However, time restraints, had another thing scheduled, and now we're here. So what we're going to do is we're going to open up the chart that we've been doing on a live account while the market is closed. So let me get my screen share started, and we'll pull up the forex.com and this trade. This trade's been going on since, I believe, the 25th of June. Actually, no. This trade's been going on since May. However, this specific trade started in the 25th of June. And I started that trade with 280 in my balance. Being that the market is closed at this time until tomorrow, Sunday, at 5 p.m. Eastern, it opens back up. So this is basically a continuation of where we were when the market closed on Friday at 5 p.m. Eastern. We closed, or I closed with this trade account at a negative $20.92. And I'm not worried about this because I have a lot that I can still drop. And I mentioned I might be moving my stop loss as well as my take profit. It all depends on what the market shows on Sunday at 5 p.m. Eastern. Being that it is considered Labor Day weekend here in the U.S., it makes it a little more difficult, but not all trades will have issues. This one is at my buy at a 0.01 lot size, and I went in at 0.68310. That was my entry price. And at that time, my stop loss is at 4,000 pips. And it's not that big of a deal because it's a 0.01 lot size. It's only $40. With my balance being over 517, it makes it so that $40 isn't that big of a deal because it keeps my margin level at over 2,400. So the higher your margin level, the less you have to worry about a continual trade from 24 hours to the next, or however long you want to stay in this trade. And my take profit is a 1-to-1 ratio, meaning the same stop loss is the same take profit of 4,000 pips or $40 profit. Now I'm going to go back to my day chart because I like it more and I can see more of the trade. I can actually tell where the trade's going to go by the trade lines or trend lines of what it's done previously. If I want to get more of a picture of this specific trade, I can go in the higher time chart. And a week time chart is pretty decent. So I'm way into the week, and you can see what's going on here. You can see that it is actually heading back down. Most people would say, well, why don't you get into a sell at this time? That is great. However, with this specific company, with this broker, they have a first in, first out rule. So I wouldn't advise you to double up and do another one, because if it goes south and it hits your stop loss, the second one has to wait until the first one is out. So my buy would have to close out before my sell could take the profit, or vice versa. It just first in, first out. And it's a rule. Now, I've noticed when the trade market closed on Friday that this market could actually have to be increased, where my stop loss would have to be increased up to 5,000 pips or $50, as well as my take profit would increase to 5,000 pips or $50. And that would be profit, so it'd be a positive, where the stop loss is a negative. At this time, there's not much to do that can be done here with the market closed. So I'm going to go back to my day chart so that you have a better picture on what it's been going on while the market is closed. When the market closes, there's not much you can do in here. Now, if you were going into cryptocurrency or anything other than the Forex market, so you were doing commodities or something to that effect, you wouldn't have to worry so much about the market closing, specifically if it's the cryptocurrency, because the cryptocurrency is your Bitcoin, your Ripple, or other things that just don't close in the US trade market. And trading with Forex is foreign currency, but it doesn't have to be foreign currency. Notice that the trade that I'm working with is New Zealand dollar and US dollar. So it's definitely not complete 100% foreign currency. I like this one because I've been studying it for quite some time. And like I first mentioned, my balance was $280. It's currently $517 plus. And Sunday, that's going up. And I can guarantee that you will see a difference. Trust me, I know what I'm talking about. I've seen and been able to see that I could have put easily a sell into this or another buy. But once again, the first in, first out rule is never a good thing when you want to do more than one trade, one entry point. It will stop you every time you get. This is actually a live account. This is not a demo. So what I'm winning or losing here is basically my money. The reason I have what is called a naked chart is because there's no indicators. There's no Fibonacci. There's no trend lines, or anything like that on this chart. And that's why I go in the higher time frame, because in the smaller time frame, go down to a minute, there's not a whole lot there that you can see. It's near impossible to decide, well, this trade's going to do this. You don't have a good amount of information. You might have the first paragraph of a book for a story. You go in the 5 minute, and once again, you still have that first paragraph. You don't see the full picture here. 15 minute, you might have the first page of your book, of the story. Because you can see it is moving, it is changing. And then the 30 minute, you might be up to the first chapter. There's still so much that you need to learn, that you need to be able to see, to verify, so you don't lose your shirt. You want to be able to take the right information, right guidelines, to be able to have a successful trade. Now, many people trade in the hour, and I don't have a problem with it, especially when I'm looking at a trade, a specific trend, a head and shoulder, or something to that effect, a resistance. Consistency is necessary in all trading. So then I go into the 4 hour, and I've got a clearer picture here so I can see exactly what's going down. But I'm still kind of iffy because I cannot guarantee exactly how this trade has done in the past. And remember what I said, when you trade right, but you look left, and you get more of a picture looking left because you can see the trade and the trend that the trade is going in. That's why I start at the day chart. It gives me a wider variety. And if you look at the time here, it starts clear back in April of 2016. That's a good 2.5 years ago. So it gives me a good idea of where this trade's going to go. However, if there's something that I'm not seeing here, then I go up to the week chart. And looking at it, I can actually see a brighter picture of this actual trade pair of what it's done over a time frame of 14 years, because it starts in July of 2004. So we can see why I could possibly want to move my stop loss or my take profit. Because if you go back on August of 2015, it went below my stop loss. But then it also went above my take profit. And following the patterns, the trend, as well as the trade that it's done over this time frame will give me an idea, a clear indication on exactly what is needed and exactly how I can decide on whether or not to move it. I tend not to go up into the month very often because I don't see much movement, just that full month. And if you don't want to be in a trade longer than 24 hours or a week, then you don't really want to go up that high. So we're going to go back to the day time chart, and we are going to adjust it. So the whole chart, whole trade is on one chart. And you can get a very good idea of where it's going. Now, with the market close, there's not a whole lot that can be done at this time. But we can take our notes and we can jot it down and make sure that when the market opens back up on Sunday, 5 p.m. Eastern, we are ready to fly. Now I'm going to stop my screen share and see if there's any questions. We're going to go for a moment or two to give people a chance to either type it in the chat or unmute themselves and speak up. Going once, going twice, and gone. Thank you for joining me today, and you're going to have a fantastic rest of your Saturday, and I'll see you again on Monday. Have a great weekend. Bye-bye.